Aloha, everybody. Hope you had a great weekend. Starting off the week, the stock market basically put in a nice little bounce attempt. The overall comeback wasn't that great, but the good news is for short-term bulls who think that we have bottom for sure. A lot of people on Twitter, for some odd reason, think that we've had a major bottom today. And I don't know. Maybe we have, maybe we haven't. I don't know. It's just a little too short term for me, especially with the Fed ahead on Wednesday. And that's why I would prefer not to really psychoanalyze this market. If we look at our momentum oscillators, all four here on the NASDAQ, as you can see, clearly heading down. There's no positive divergence in any of them. The same thing with the S&P 500. You can see still no positive divergence in TSV, MACD, stochastics or RSI. So as long as that's happening, I find it hard to believe that we have a great bounce attempt here. The Russell 2000 still hitting new lows. The index overall looks bad. It lagged heavily today. And the Dow Jones Transportation Average also lagged today, and its oscillators look absolutely terrible too. So it's kind of hard once again to get bullish. And then if we look at the biotechs, they still continue to look bad, even though drug stocks with some biotechnology related stocks did good today. But overall, as you can see with the oscillators and the overall price action, trying to call today a bottom is a bit premature. So, the verdict's still out. Our models are still under an across the board sell signal. Heavier volume or not today, the price move simply wasn't good enough to go ahead and get extremely bullish. And if we look at all the indexes that we're throwing up, what index did the best today? The Dow Jones Industrial Average. That index should have done the worst, and the Russell 2000 should have done the best. Instead, we have the opposite. So I wouldn't look too much into this bounce. This is still just day one of a market rally attempt, nothing more, nothing less. Now getting to the sells really quick. RIC is a fail, ELMD is a fail, HBP is a fail, ONE is a fail, ADAT fail. So all those are 100% sell signals, non-canceling quality, and for the high quality stock, AEPI was the only one that failed on an end-of-day basis, closing below the 50-day moving average. I could give two shits if it does it on above or below average volume while we're under a sell signal. So just obey that move. And then HubS, technically a 50% sell signal today. I've been knocked out of my entire position. Loan is a 50% sell signal. My final sell stop is below 425. And then Fix is a 50% sell signal. I'm completely out of Fix as I've raised all my stops to just absolute tight levels. And for instance, today Amazon knocked me out of it intraday, but by the close, strong move. 657.88 was the high day yesterday, and it retook it today, but volumes below average and below the sell-off on Friday. So it's not, I don't want to buy it back just yet, but Amazon is one of the higher quality names that I'm no longer long, that I would look to buy back if it can, by chance, base out here and rally higher, which once again I don't see happening. But what I could easily see happening in this market, though, is rip your face off short squeeze following Janet Yellen's announcement, the FOMC meeting on Wednesday. It's pretty much a given that the Federal Reserve is going to hike rates for the first time, I believe, since 2006. It's about fucking time. It's been 9 years. But I don't know. There's a lot of people that think the market's going to continue to sell off, and the most surprising thing will probably be the most probable thing, which to me would be a 5% plus or 3% plus rip your face off rally following the announcement. We'll see. Would it be even funnier as if we closed flat on that day? That'd be hilarious, wouldn't it? But either way, this market is a mess. 2015 has been the sloppiest market ever, according to the volatility of the volatility, the VVIX. As you can see in August, we've never had a more volatile market in the history of the stock market. August 2015, there you go. And as you can see in December, we're trying to creep up to those volatile levels. So once again, I want to remind everybody, it's been a rough year, but if you have survived this year, it's pretty sure that you're going to be able to survive anything, because I've never seen a market do so much and do so little by the end of all of its work for a year. But this is what we're looking at here, longer term pattern. Just all this price action is just absolutely horrid. It's ugly. V-shaped rallies led to rollovers the entire early 2015 and mid 2015, which led to the brutal sell-off in August. Ugly V-shaped rally led to what should have been a successful test, but successful test normally on the second leg down goes lower than the first leg down. So the fact that the NASDAQ didn't hit new lows in October and then rally back up and with the momentum oscillators lagging, was almost foreshadowing to this current rollover that we're in. But that's just another thing. So after all this sloppy trade, we get the big sell-off, and after another V-shaped rally, it looks like that we're commencing a full-on rollover in all of the indexes, especially, you know, the Russell 2000, Dow Jones Transportation Average, and the biotech. And remember, guys, those are the three indexes you want to see lead. And the Dow Jones Transportation Average, Russell 2000, and biotech all lagged the overall market today. So it's still ugly out there. Safety, safety, safety. I believe that we're about 35% invested on the long side, 5% invested in leveraged short positions, and we have about 60% cash. But we're going to put a little bit of it to work today, as I got two new long signals and two stocks that I am not excited about at all. But a signal is a signal. PRA Health Sciences is a CanSlim quality stock and perfect speculator name. So with it being in those two scans and also being confirmed in the new 52-week high scan on volume and the price volume BOP scan, we'll go ahead and initiate a 1.5% long position in it. However, I don't want to pay more than 45.66 for this name, so that's going to be my limit, 45.66. I don't care about 47.23 or 46.71. I want to get it 45.66, or else it can go without me, just like Smith & Wesson Holding. I could care less. Market's too insane right now and too choppy. And if you even just look at this chart on an arithmetic, you know, chart, it's just nasty. It's ugly. It's sloppy. This was tight back here. This was all tight trading, but look at it now. I mean, that's insanity. But a signal is a signal, so I'll go ahead and risk it. My risk is well defined. And then also, of course not, FPRX. The F's and P's and R's always throw me off whenever I'm trying to pull up symbols. But that one has given a pocket pivot point signal today. It is also a pre-perfect speculator name, just like PRAH. Why are they not full-on perfect speculator names? Because they're not above $50 a share. PRAH is 46. FPRX, always difficult to type, is a $40 stock. So they're a bit early, but good signals overall. Strong relative strength compared to the market. This pattern is a little bit more tight, but once again, it's not a high quality pattern, but it's just one that I want to take just in case the market does rally ahead of the Fed, because our new long signal NVCR from Friday I didn't think was going to work. Did work, up 2.90% today, so I'll go ahead and keep that theme. And with the two new long positions, we'll just keep stops tight. PRAH should have been a 2% long position in this market anyway, because it was confirmed in two other scans, besides being perfect speculator and CanSlim quality. But even at 1.5%, the possible dollar amount loss number is bigger than I would like to take under this kind of signal that we're in. But bottom line is, overall, today's market rally, not good enough for me just yet. It's nothing more than day one. I recommend exercising caution and only day trading ahead of the Fed. And even then, who knows what will happen. It's a pretty crazy market. Cash is king.